The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, and thank you for joining us today. Interesting day, to say the least. Fed decided to, I guess, at least publicly acknowledge that they released information early yesterday, and about 100 traders and congressmen got, or trading groups and congressmen got access to the Fed minutes reports yesterday at 2 o'clock, and so, which is, 24 hours early. So, right time, wrong day. Anyways, well, they realized the mistake sometime yesterday. And so they decided it might be, polite of them to go ahead and let the rest of the world know. And they released it this morning at 9 o'clock. So, the Inspector General is looking into, what happened and why did it get out and who got it and were there a lot of trades based on it and, on down the list and we're taking this seriously. Whatever. But, they're taking it seriously that people found out that they released it early. That's what they're taking seriously. But, anyways, so markets are moving, markets are shaking, and despite the concerns that there's a major descent on QE and that it will most likely end at the end of the year, is what, it's looking more towards. And, of course, multiple members are looking that way, and Bernanke's looking at checking out early 2014. And I'm sure he's like, let's pump this thing up. Let me walk away, write me down in the history books as the man that saved the market, and let the next guy be written down in the history books as the man that crashed the market. And one thing he said, I remember this, and it was a crazy, I don't even remember when it, maybe like 2009? Or maybe it was 2010, I'm not sure, but I think it was 2009. And I actually remember Bernanke making the statement that he could guarantee, and he said this, is either directly to Obama on an interview or it was in a congressional hearing, but he basically said by utilizing all the tools that the Fed has at its disposal, that he could guarantee that we would not suffer a deflationary depression. Well, yeah, because he could print to, infinity and beyond. So, but just a, crazy statement. But I guess they're going to let the Japanese come in now and do their thing on the currencies, devalue theirs. And but it's, currency wars at its finest. Now, nobody wants to acknowledge it's currency wars because at the end of the day, are they really doing it to gain an advantage over the others on imports and exports? Well, yeah, kind of. They're really just trying to do it to pump up their economy. And, that, of course, means manipulating their currency in order to, make it better to do exports. But, so, yeah, they are doing it. They're just not calling it that. Right now, so let's go ahead and check out where are the markets, because like I said, they are just flying today. And plenty of great trades all over the board lighting up. We got the S&P right now. It is up 19, almost 20 points right now. We got the Nasdaq rallying on up over 58. We got the Russell up 15.2. We got the Dow up 143. Gold is moving down 3 deviations on the day. We're definitely going to take a look at some deviations today, man. We got these kind of movements. Let's check out how they worked out. We got silver. It is down almost 1% on the day right now. We got copper down over 0.5%. We got oil really quiet, only down 16, 17 cents. Looking over on corn, it's pretty quiet as well. It's down only a couple bucks. Soybeans down $4. And a lot of times you see those ags taking a back seat when the indices are going nuts. Looking over at the euro dollar, it's down a mere 19 pips. Pound dollar, you'd think that, they're on holiday, down 4. And Aussie dollar up 50 pips right now. Euro yen up 67. Pound yen up $1.19. US yen up 68. US CAD just down a mere 13 pips. And US franc up 9. So a little quieter on the currency front, except for, of course, the yen pairs. If you're trading currency right now, yen is where to be, okay? It's trending like crazy. So anyway, so that's what's going on right there in the markets. And as we know, Fed minutes already happened. Let's go ahead and check out what else we got coming up on fundamentals so you can be ready for that for your week. And we got the federal budget balance report coming out at 4 o'clock. Not usually the biggest market mover. But let's see, right here, they were going to have it earlier. It was going to be, 2:40? But they bumped it back, or no, wait, it was going to be at 2 o'clock. But they decided to bump this one back 2 hours. They moved the other one up 5 hours, being the FOMC meeting minutes. But they bumped back the federal budget balance 2 hours back to 4 o'clock due to, source rescheduling. So I'm sure they're trying to figure out what in the world's going on. Whatever. I don't know what their reason was. Maybe they didn't want it falling on at 2 o'clock because they're like, well, we were pushed out the minutes. They didn't want that to be the story of the day. So they decided to go ahead and just, let's avoid 2 o'clock today altogether and not release anything at that time. Anyways. So, we had that information. That came out yesterday. It was just really interesting seeing how, all this is coming out and where everything's coming from. Or that's coming out, today at 4 o'clock. And then, let's see, what else do we got? Tonight, we do have the employment change and unemployment rate in the Aussie. Getting some decent movement today. So, looking forward to some decent movement tonight on the Aussie dollar. And then if we scroll on forward, we can check out, we have unemployment claims. So that's going to be coming out tomorrow morning, along with some medium impact reports, like FOMC Bullard is going to speak. We're going to have import prices. We'll have NHPI coming out of Canada. So you could be looking at USD CAD, but that's not the most massive pair, but it does usually move pretty decently off that report. So you could be looking at USD CAD, and like I said, it's not just a massive mover, but it is a medium impact report. And so one that you could check out. And, if you're really, if you're trading currencies and you're looking for some movement, check out Euro CAD, CAD Yen. Those would be more your pairs that you might want to be looking at just for actually just trading. But during that time frame. Now, as far as unemployment claims, we have several things we can look at. We can look at gold for doing the straddle strategy. Challenge with gold always is, usually there is more implied volatility built in. So you look for it. If you see it, great. If you don't be totally shocked. And right now I'm going through and I'm just looking at unemployment claims because we're always looking to see, what stats are consistent, what pairs are consistently moving on any specific news announcements so we can straddle on Nadex so we don't have to be directional. And right now, usually I would say dollar yen, but we might have a new champion in the room here. And it's sort of it's going to be sort of a drawdown. It's going to be a bit of a tie between the pound dollar and the dollar yen. So basically they've either been the same or one's beat the other over the past 6 reports or so on that. And so we could of course pull up and go through a whole lot more of them, but recent history is usually the best indicator of current news volatility, simply because who cares what happened in the news a year ago? It's not quite like a trading system in the sense of now you could look at a trading system in the sense of how did it do over time. But as far as actually picking what currency pair, you want the ones that are moving. So, and yen just has a lot of reasons to move. So that's one reason to check it out. But anyway, so, we look at pound dollar. You're going to have some volatility. Obviously, Britain's open. So it'll have the things going on. Yen, it's just been moving, period. So just with all the current things that are happening right now. So between dollar yen and pound dollar, those would be the two things I'd probably look at the most for straddling right here on the unemployment claims. And let's see, if I look at dollar CAD, I'm just trying to see if I see anything that just stands out. But dollar CAD really not. The other pairs are beating it hands down. So I would definitely be sticking to those pairs. And the only other one that even has a chance really of beating them is dollar franc. So pound dollar, dollar yen, dollar franc, and I'd probably go more for dollar yen or pound dollar out of if I have to choose one of those two, or maybe both. Just put half my risk in each trade. So those are the two for unemployment claims tomorrow that you can be ready for. And then, of course, you got Friday coming on up. We're going to have core retail sales. We're going to have PPI. We're going to have retail sales and core PPI all coming out at the same time. And then that's going to be 8:30 on Friday. We'll have preliminary University of Michigan Consumer Sentiment Report. And Mr. Bernanke is going to grace us with his presence again at 12:30 on Friday. And curious to see if he'll, I doubt he'll obviously be addressing, minutes coming out early. He's actually just doing a speech. He's speaking on the resilience and rebuilding for low-income communities. The conference is sponsored by the Federal Reserve Community Affairs Officers in Washington, D.C. So, anyways, totally a news announcement right there, right? And so going on over, looking at, okay, so what can we trade right here on this core retail sales PPI? Let me see what we can get for consistency. And my guess is going to be dollar yen. Let's see, we got dollar yen, dollar franc, euro dollar in the lead. Let's see if anybody starts pulling ahead. Dollar yen starting to pull ahead. And what I do is I go through and I have basically just reporting tools. I go through and I'll analyze multiple pairs at the same time, see which ones have the greatest impact on any specific announcement. And looks like you're going to have euro dollar, pound dollar, euro dollar, dollar yen are really going to be the main pairs. But, overall, I think it's going to be dollar yen is going to, take it and going to own it. So, and like I said, I'm just looking across every pair, and I would probably be looking at dollar yen for the one to trade. And dollar yen gives you plenty of reasons to trade simply because of what's going on. Just be aware, it is Friday, okay, when this news comes out. And so when it comes out, that's Friday, you need your move, and you need to be done. Don't expect a whole lot of movement on it. That's sort of I always hesitate trading currencies on Fridays just because, as the other countries are shutting down. But dollar yen would be the one pair I'd be looking at for Friday morning. I would probably avoid even touching the preliminary University of Michigan Consumer Sentiment Report as far as a straddle. Dollar yen would be the only thing, again, I would be trading on that. But you just had a report on it. So, back to back, is it needed? If you really want to trade that, then the best way probably to do it, and it has a nice high impact report for the 15 minutes following it, is I'd probably be more inclined to go in and pick one that expires after. So you could actually go in, since it's 8:30 and 9:55, you could actually choose a 10 o'clock, and then that wouldn't be much after. It definitely would give you some time to trade it. You could also choose the 3. So basically you'd be looking at either a 10 a.m. spread, a 3 p.m. spread, or a 10 or 3 p.m. binary. So 10 a.m. or 3 p.m. spread straddle, meaning you buy one below, or buy one above, sell one below, or strangle, you buy a strike above, you sell a strike below the market. And that'd be a way to capture both of them. And the whole idea being, let's say you go to that first trade and the market just doesn't move that much. Well, then you do get a 5-minute pop possibility right there on that 9:55 report. And, it's pretty rare that you get a trade like 5 minutes before. And so that 9:55, you might even be able to go in again and find a really cheap. And this is probably a trade I'm going to be looking for now that I think about it. I'll tell you about that when we get back from the commercial break. Stay right there. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I want to remind you, if you have any questions about any stocks, futures, forex, trading styles, binaries, spreads, risk management, trading psychology, on down the list. Feel free to give me a call. Give any of our hosts a call. You can reach us right here at 877-927-6648. Taking your live calls right now, 877-927-6648. And checking out a few things going on right now. Let's see what we have. And what I was talking about was we had the 955 report, preliminary University of Michigan Consumer Sentiment report coming out, and I was talking about how that could actually set up to be a unique trading opportunity on Nadex. And let's see here. I'm going to pull something up. I'll show you this. But what happens is there's basically a new spread that's released every 2 hours, or new binaries released every hour. And so if we go over here and click on the spread scanner, then what you're going to notice right here is that you'll be able to see, which is, let's say, USD yen. So we'll click on that, and every 2 hours they're going to have, well, I guess right now is not the best time because, they're about to close up pretty soon. But let me get rid of all the risk filters because we've had so much movement lately. There we go. There you go. Now you can see, the 2 o'clocks, the 3 o'clocks, everything else. So they're coming out every couple hours. And this may not even be a spread trade. It might really be a binary trade is where I might go to focus on this one. because what I could do is I could get the ones, since the report's coming at 9:55, I could check out the ones that are actually going to get released, okay, at 10, which would make them extremely cheap. So, I mean, like really, really, really cheap. Like sometimes like $5 on each side. And so I could take like a $5 risk and be looking for a very small movement. And so why don't we do that? We're going to log in. I want to show you sort of how this looks. I'm going to log in the Nadex platform. And I want you to see what I'm talking about, because you get these and you get them really cheap. You can have some great trades. I had an awesome, and we got it coming up again, Google earnings strangle I did on NASDAQ last quarter. And so looking forward to doing that again here in the next couple of weeks. Actually, next week? But coming up here in the next couple of weeks. And anyways, and I was able to go in and get it just, stupid cheap and make a lot of money on the trade. But if we go over here and check this out, this is the Nadex platform. You get your demo account for free. If you don't know how to get it, by the way, let me let you know. Let's go to tfnn.com, click on the Nadex banner, click on our products bull spreads, our products demo account, and then fill in the username, first name, last name, phone number, and email address. You'll get an email with a password in it, and then you can log in. As soon as you log in, change your password, because you're going to forget it. So go to settings, and then go to password, and then you can edit your password right there, okay? And that way you can continue to log in. Otherwise, you're trying to figure out how to get it. You got to call them, because it's it's an exchange. It's very confidential. They don't just have resend me my password links. So, anyways, but you hop in and you go over here. You click out Forex binaries, and then you'll go to, let's say, USD yen, and you scroll on down here. And I mean, you can do this really on any of the markets that you can find a really good tight one. The nice thing is the intradays are really close. They're only 10 pips wide. So if even that wide, let's say they're 5 pips wide on USD yen. Okay? And so when there's very little timed expiration, you can be looking at pound dollar, like I said. You can be looking at USD yen, either one. You can even check out some indices and see if there's anything there. But they're so close, you can go in and just get them, at a very, very low rate. And so if you can find some, and it depends on how much implied volatility is built in. It depends on a lot of things, I guess. But if you can find some really cheap, then you might be able to find yourself a really low-risk trade. And you may be able to put up, say, $10 to $20 and have a profit potential of $80 to $90 on the trade within a matter of a few minutes, because you only have 5 minutes till expiration, because the report comes out at 9:55. So that's sort of one just throwing out there. Check that out, and it could really be a cool trade to look at right there in the market. So let's go over here. Let's check out a few things. Let's look at our deviation levels. And we've had some movement in the market, obviously, today. So let's see what we can do to, take advantage of some of that movement. And I want to get a little less data, because otherwise it's going to take too long to load these charts. And I'm also, so let's look at the last, 10 days or so here. That's about all we need. And load the chart. And let me pull this up right here in front of you. When we get back, we're going to do a recap, and we're going to see where all the markets are at right now. All right, we'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know that you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right of the TFNN homepage. But if you don't have a mobile connection that keeps up with streaming live video, then you can simply visit tfnn.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and call-in radio talk shows. TFNN is able to teach all levels of investors the technical skills needed for trading in today's marketplace. In order to get the best information available, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And what we're checking out right now is the deviation levels. We got the S&P right now up at 1.5 deviations. That's a big move. It's a rare move. And it is hanging out right there. And so, how would you be managing your stops? Where would you be looking, for reversals on these trades? Well, like I said, I like to look at the bars that close above the deviation line. And let's see. Pardon me, folks. Anyways, but let's see here. Let me add in this indicator. I'll show you where we'd have our stop at right now because we actually just moved it up. We'll go on down here. There we go. And then we're going to go on this. And what we're going to add in is look at, okay, so what we would do, look at the bar that closed above the deviation line, okay? So if you're long, that's where your stop would be. Because, again, if we zoom in, let's get in here, resize the bars a little bit, make it a little easier to see. There you go. We can see this bar closed above the deviation level. Now, if a bar subsequently closes at or below it, which we do get right here, then if a subsequent bar closes above it, the same deviation level as where we have our stop, we can move it again. So now we can tighten it to right here. That's where our stop would be on a long trade, our trailing stop. And it allows us to put it, very tight but also gives us a clue. So if you're looking for a reversal trade, once it breaks below that low, that would be a point where you could actually start to look for a reversal. So you're not hopping in and just completely trying to fade. You're waiting for some sort of resistance point to be, broken. And so that's a very simple method I like to use. And so we're very close to that right now. I want to see it broken by 2 points, or 2 ticks, I'm sorry. So that put us down at 1581.5, and before it actually take any action on it. So if it does break that, then I'd be looking at a very potential short, and we'll probably start seeing it move on down from there. And that could happen any minute now. See the retracement there at the end of the day. So let's go ahead and check out a couple other markets. We got the NASDAQ. Over here on the NASDAQ, basically had the exact same pattern set up. So right here, we had a movement, except for 2 deviations this time, which is insanely huge. And right there, and then let's see. Actually, no, wait, we'd have to move back even further on the NASDAQ. Sorry. Right here, I had a price alert that was making me think of a deviation level. Get rid of that. There we go. Okay, and then it closed below it, and then it closed at it, then it closed above it. I'm looking for that above it close. So right here is where I'm at on the NASDAQ. So a couple ticks below this low right here would be 2845.5. Okay? If we scroll on over, we can check out the Russell. Over on the Russell right here, and we can see we got one, haven't quite hit 1.5. So stop is not as tight. Now, one thing I will do, this is this is a little more complex. You have to monitor more charts. But let's say that you are trading an index, and the indexes like to sort of flow together. Sometimes little different percentages moves, obviously. And so if one deviation is hit on one of the levels, I may be a little more cautious on the other ones as far as I might want to tighten up my stops even more. But right there, we have not had a close below it. That puts us, that's about $400. Close down below 90, 36.2. So right there on the Russell's where I'd have it. And now if we close up above 93.5, then I can move that stop up again. And the whole idea is to give your profit some room to run. So without tightening your stops too early. And, and then the goal trying to be, hey, capture as much of one deviation as you can in a day, and this allows you to do that. So right there we sort of have the same thing, but like I said, with S&P, we can go back over and check it now. It might have broken down. Let's see. Within like a couple ticks, we're almost there. So if it does break down and you were in the other markets, you may want to decide to go ahead and take some profits because you're so high, basically you're so close to a 1.5 or 2 deviation level in those other markets as well. So if this level gets broken on the S&P, I'd be looking for potential reversals and definitely be looking to take profits as well. And now let's go in. Let's check out a couple other markets. We had some nice movements over in our metals. So let's go in and look at gold, where it moved triple dev day. Check that out. So just a massive move right there. We got to move. If you can't see the trend, you're blind. Okay, but you want to capture obviously all that trend that you can. It's moving on down. If you're still in, and then bravo, you're following your your deviation rules there. And we got to close right there below it, and then we're able to basically there's just multiple closes right here that you can take advantage of. But you have a close right here at the 1 deviation mark, right there. Then it closes above it, and then it closes below it, so we can put our stop even tighter. And then this one closes below it, so we can put our stop right there on the 1.5 deviation. That's awesome. And then it moves down and closes below 2 deviations. And if I start getting to 2 deviations, sometimes I might go in and add a half deviation mark, like in between as well. So, because it's so rare that you have that, you even have to deal with that. But you could add in that level, and so basically you could say, like, right here, I might want to tighten this up. I would probably be looking at this point to tighten my stop to, this bar right here on gold. Because, -3, that's a 99.7% of all expected move in a day. So there's really not any more expected movement on the way down on gold. Could it reverse? Yeah. But the gold market's closed now as far as the pits. Now, of course, it's still trading on the Globex electronically. But, at this point, it's basically done. So let's go ahead and check out silver. Over here on silver, had some just wild, volatile swings. And it's one of the reasons I'm not the biggest fan of trading silver. But this is one reason why you might want to look at trading, the binaries mainly. I like the binaries. I don't like the spread so much on silver on Nadex just because of how they tick. But, you can't get stopped out. You can trade those binaries and you don't have to worry about stops at all. And your risk could be $10, $20, $30 on the trade. So, anyways, but it moved right down to a 1 deviation level. And, really just stopped right there and just bouncing back and forth. I mean, half deviation bounces over and over again. So pretty crazy stuff happening right there in the silver market, but it's staying right within its expected range of 1 deviation. And if we go on in, let's see here, we can check out, we got one other metal, right? We'll go ahead and check out copper. And it did not want to let anything steal the show. It moved on down again even further. It's on down to 1 deviation also. Pulled on back up to half, but did do its expected move. You're expecting a 1 deviation move from high to low. That's really what you're looking for. And so we obviously got that right there on copper. And now we can check out a couple of the other markets here. Let's go ahead and look at our corn and our soybeans market. And corn had a very interesting move right there. So obviously a news-based report and just flew. And anytime I see stuff like that, this is one of the reasons why I like having 2 charts. If I see something that's crazy, I like to verify it. And so I'll go over, see the same thing on Thinkorswim. Okay, we know it's real, we know it happened. And just a crazy spike in price action right there on corn futures. And that should scare you. Okay? I mean, that should scare you to death, seeing something like that. Anything can happen. And, I had a trader the other day talking about wanting to start trading futures. And but I also know this trader, and I know that they are not the best at risk management. They're a good trader in the sense of picking direction. But they're a bad trader, and even taking stops, they'll take them. But they're a bad trader, and they will put on too big of a position. And so they'll take their profits too soon because they're afraid that they're going to lose. And so I guess you wouldn't really call them a good trader. Maybe they're good at picking direction. But they were going, hey, how much does it cost to get into a futures account? What's my margin? I'm literally telling them, I'm like, you do not need to do this. Don't even touch it. Don't even go to futures. You need to go to Nadex. I was like, if you get your risk management under control, your size under control, then you can check out the futures market. But just crazy stuff happens. And even with good risk management, crazy stuff happens. That's a 27-point move in, probably seconds, if not minutes right there. If we go down and break it down even further, seconds. Look at that. So we got to close right here at 1645, and then move up to 66.75. And so you're talking 20 points. And, less, I bet that all that happened in, matter of just a few seconds. We went down to tick or second charts. And that's something you shouldn't be playing with. You should. So, how valuable is that? That's basically $50 a point. So that's $1,000 move in a matter of a few seconds. And if you pretty much had a stop in either direction, you got stopped out. If you were short, you got stopped out. If you were long, now if you took profit in a matter of a split second, then great. But also, it fell on down, and you probably got stopped out. And so, just some really, really interesting things right there. You want to be aware of those, and you want to know about your risk. You want to know that anything can happen in the market. So that way, you go, what is going to be the best way for me to trade? And when people ask me, why do I trade Nadex? Well, charts like that, that's why I trade Nadex. Because that kind of stuff can happen to you, and that it hurts. It can hurt really bad if you're in the wrong contract at the wrong time, and it moves that fast on high leverage. What's your solution? What are you going to do about it? And so go over here, check it out. What do they got? Well, we can go to commodities, we can go to bull spreads, we can go to corn, and we can check this out and look at just the massive movements. And you can go in there with completely defined risk, and look at that. There's the same spike. Still got to take advantage of it, okay? But you had defined risk the entire time. So this thing was down here at, 4, and spiked on up to 1657. And so you could have taken advantage of that move, but 44 down to 1640. That's a 4.0 move. That's a $40 risk, no matter what. And if you were in the wrong side of that trade, okay, let's say you're over here. So let's look at that. Let's say you're on the wrong side, and you get that massive spike against you, okay? Well, when it spiked against you, this is what happened. This little bar just hung out here, okay? Didn't do really much of anything to you. And so let's say you got in at 39 or so. 1 point risk. 1, okay? So maybe 1.5. Let's say 1638.5. So 1.5 points risk. What does that mean? That means $15 of risk, okay? Or if you did 5 contracts, you'd have, I don't know, what was that? $65 of risk. So, I mean, really, really defined risk despite a massive spike. You didn't get spiked out. It actually came back down. You could have came back in and actually taken a little profit out of the trade. So, or maybe a big profit if you would have had a limit order sitting in there to take advantage of it. Corn futures, your host. So check out corn over on Nadex. This is a good reason, and they've also increased the bid quantity and the offer quantity. See, they're up to 50 now. They used to be at 10. So they increased the time. They now trade till 2:15. So things just getting better and better over there at Nadex. And that's liquidity at that moment, at that price for that contract. Looks like we got a call right now. We got Rick from British Columbia calling in about gold. How's it going, Rick?
Hey, not too bad. How are you doing today?
Hey, man, doing great.
Gold really hasn't pulled back much. Sure, it's been $300, but boy, have the gold stocks ever pulled back. But I'm just curious if you think gold's going to pull back to like $12.50 with that double top. There was a double top in 2009, 2010 right there, right?
Right.
I actually had some gold just before that. I went placer mining in 1988, and when gold was at 1165, I thought, okay, we got to be topping out. So I I brought them to the plane real quick, and I got it melted down in Vancouver, and then they.
When did you get out?
Around 1165, so it must have been somewhere in 09, I guess.
Okay.
Yeah.
That kept on running, but but you never know. That's one of the things, and you just trying to protect your investment.
But I'm just saying, if you put, the best thing with gold is put a 5 or, whatever 10-year, big picture on there, and I'm just curious. I mean, for gold just to pull back to $12.50 would be just a healthy pullback if you look at the big picture. What do you think?
Let me pull it up right now. And I trade so much intraday, but I definitely analyze the daily charts even on my intraday trading. And let's see here. Yeah, you always want to base it on the volume. I mean, that's ultimately what it's going to come down to.
It does, yeah.
And so as far as like where it's going to go, as far as the big moves, the pullbacks, everything else, that magnet price.
Yeah, I got it on a monthly, and that day it took off from $12.50. It really didn't have much volume when it took off, to be honest with you, from the chart I'm looking at. But
we've basically pulled back just now. Actually, this is really interesting to look at. I'm on the monthly with you, and just looking at the gold futures contract right here, and we have literally just now today, for the 4th time, pulled back to the high volume low back from September of 2011. Mm-hmm. And we're literally like 1, 2, 3, and 4 times. Stay right there. Let's talk about this right after the break, okay?
Gotcha.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. Just checking out gold, where it might move on to next. And right now we got Rick on the line. You still there, Rick?
Yeah, you betcha. You know, awesome. I'm not saying gold's going to go straight down to this case, as we know.
Well, I mean, gold knows how to move, you know. I mean, right now we're in this descending triangle pattern, as you can see. I wouldn't be looking to take any big short moves at the moment on gold right now, because as we can see, it's hit this level now multiple times and bounced off of it. I'd really be waiting for a close really below the high volume bars we had back here. Mm-hmm. So right here on the low of, let's see, what do we got? 1535. We get a close below that. That's when I'm going to start taking on, at least right now, on short positions. But this triangle is getting tighter and tighter and tighter, and usually, you're going to see. This downtrend, you're going to be looking for the market to definitely bust on down. You got to watch that volume, and you got to see if that volume's picking up as it's breaking through it. And so if we have, if we have a drop in price closing below the low there, with accelerated volume to the downside, I'd definitely be writing it down. And yeah, I mean,
you know what I do see here right now, just is the euro. If we just leave gold alone now, because I think we cover it pretty good, I see the euro possibly bouncing to 133 on a daily. There's kind of volume up there, but if you put a 1 year daily chart on, you'll see it could be forming a head and shoulder top down to the all-time low. Now, as we know, there's head and shoulders all over the place.
Yeah, they're always so clear after they formed, right?
Yeah, you're a genius when they work, but they don't always work.
Yeah.
But anyway, that's something that I'm looking for because, and something like that could take gold down, pretty fast, too. So anyway, I just thought I'd mention that.
Yeah, basically as the dollar's rising in value, dropping the value of gold. So, because it takes less dollars to buy it.
Right on, man. Thanks a lot, eh?
All right. Well, hey, thanks for giving it a call.
You betcha, man.
All right, and then one last call here. Got a few more minutes before they wrap up the show. We got Bob from Mount Vernon, New York, calling in about the VIX. How you doing, Bob?
Hi there, Darrell. Thanks for taking the call.
Yeah, thanks for calling in.
I'm doing cash-secured puts on the VXX. I was wondering if there's anything similar in Nadex that I could play with.
Okay, so obviously you're doing the puts on the short-term VIX. I mean, that's what you're trading, right?
Right. Yeah, that's right. Yeah.
Well, they don't have like a VIX contract, but what they do have, and this is something that's really interesting to, I definitely demo it and play with it. But the binary contracts, okay, are really all about implied volatility, which is obviously what the VIX is. And so you can really use a lot of volatility plays. But as far as if you're doing puts like long term, even weeks or whatever, multiple weeks, then really Nadex is built for either intraday or weekly. They do have weekly trades, but they don't have basically a volatility index contract right now.
Right. But is there some VIX instrument within? I mean, it doesn't necessarily have to be an extended time period. I was just thinking that I like the VIX, as a vehicle, and I was wondering if there's anything available.
They don't have a VIX instrument of contract yet. I know there are binaries on the VIX, but the liquidity is wretched. They're not on Nadex. The CBOE actually has VIX binaries. So if you can find a broker that will actually, Thinkorswim used to have them and they dropped them because they have no volume, no liquidity. But there are binaries on the VIX. But Nadex does not have any VIX-based binaries right now.
Right. Okay, well, thanks a lot. I really appreciate it. Have a nice day.
Hey, you bet. You too. All right, well, thanks for calling in, everybody, today, and had a great show and interesting day in the markets. I'll see you tomorrow. Stay tuned. We have another great show coming up for you.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.